Yo, welcome guys. This is your boy Hector, well known in the trading space as Limitless Trader. Today we're talking about indicators. We're going to talk about three main indicators that I use every single day to determine whether I'm out, or I'm not trading at all. So let's jump into this. This is going to be part of technical analysis. Let's do this shit, man. I'm so fucking excited, bro. I'm giving you the keys of the fucking kingdom, guys. This is going to change everything you do from now on. Okay? You can practice first with Weeble, you can paper trade, you can do whatever you need. If you need help, I'm always here. Ask. Ask. Alright, let's jump into this. First, we're gonna talk about EMAs. What are EMAs? First of all, the EMAs, it's exponential moving average. It's a technical chart indicator that tracks the price of an investment, like a stock or a commodity, over time. The EMA is a type of weighted moving average that gives more weighting or importance to present price data. Alright, in more simple words, EMAs are lines that we use on the charts, like this yellow line, or that like this blue line right here, or like this red line right here. So to have this specific chart that I have, you just need to have trading view. This app right here, trading view. That's all you need. If you have that, you can copy my exact chart, so you can have exactly what I have to trade. If you have trading view, you don't need to pay 14 bucks. You just need to have trading view. That's it. You apply for a free account and you can have it. All right, you're gonna have this lines right here, like this one, right, like this red lines. All that lines are is levels, important levels of rebound levels. Just know it like that. Those are rebound levels. So we were talking about EMAs. So the more that an EMA is closest to the number one, the fastest it will go. So it's gonna be closest to the price, right? That's why the blue line right here, that blue line you see, it's closest to the price action, right? It's closest to the price action because that line is a 13 EMA line, right? The yellow line you see here is a 48 EMA line. That's why you see it's close to the price, but not that much as the 13 one, right? It's more of you can see more of a gap, right? But this is the 200 EMA line, and you can see this is way farther than the 13 and the 48 line, right? You can see it. I mean, sometimes it touches the price, but I mean it's gonna be, more than likely is going to be away from the price. So what that means is that you can use these lines to determine a trend. How I use it? First of all, I will determine if I'm going to play calls or puts depending where is the 200 EMA line. The 200 EMA line is going to give me a clear view in how I'm going to approach the situation, right? If the price is above the 200 EMA line, I will always and only consider going into call options or bets it's going to go up, right? Because the price is trading above the 200 EMA line, right? As soon as the price goes below the 200 EMA line, I will start considering going into puts, right? But that means you can see here, whenever the price goes below the 200 EMA line, the red line, more likely it's going to go down, right? That is a strong EMA line. The 200 EMA line is a strong long-term EMA line that we were talking about. Closest to 1 is it's going to be closest to the price, right? And farther to 1 is going to be farther away from the price, right? But that means 200 EMA line is going to act as support, right? It's a longer term, trend. The EMA to the 200 EMA line is going to act as a longer term trend indicator, right? That's why you want to always play and trade with the trend, right? If you have the price that is going under the 200 EMA line, like you see here, the price right here crosses. Let me show you. Crosses. It was below right here. It was below. It closes above. It goes above. And then here it goes under again, right? First of all, I always goes in when I see the 13 line, the blue line, and the 48 line crossing over. When you see a crossover, you can see here, right? It's a C. It's a C means that the 13 line, the blue line, is going above the 48 line, the yellow line. That's a call signal. It's a call signal, but you have to watch what is the 200 EMA doing. Where is it, right? So in this moment, you have a signal right here, the 13 EMA line going above the 48 line, right? That's a call alert. That's a call indicator, right? But the 200 EMA is right here. So the crossover was right here, but it's really, 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 really close to the price. So you the one that take that trade in that particular moment. You want to see what the price is going to do when it hits that 200 line. And at least you want a retest. What's a retest? A retest is when right here you can see the price tested that 200 EMA line. So it touched the 200 EMA line and it stayed in the 200 EMA line. And right in this particular moment, when it bounced up, you can see there that it's going up. It has the strength to bounce from that 200 EMA line. When it bounces like that, then you consider going in. Because if you go in right here, you have the probability that when the price touches the 200 EMA line, it could bounce back down, and that call signal becomes null, so becomes nothing. So first of all, the crossover, you have the crossover, right? You have the 13 going above the 48. You have the 200 EMA line right here. You want to wait on what it's going to do when it touches, right? Let's say if the price, instead of going up right here, it goes down, you're going to wait for the 13 line to go below the 48 line, and then you consider going into puts. All right, because that is going to give you more confidence. It's going to give you more strength. It's going to give the move more power. So right here in this example, it tested, you have the signal right here, it tested the 200 EMA line, right? And it bounced up, right? It bounced up from the 200 EMA line. Here, right here, is the moment where you get in. This is the moment where you get in, and I got in that exact moment. Right here, it bounces from here, right? I mean, remember, this is happening in live trading. So you're going to see everything that I'm talking about live. So this is not going to be this simple like seeing it here. You're going to do this live with the price action right there. So I was in right here in this trade, right? It comes up right here. It bounces from the 13 line right here because every EMA as a support and resistance levels. Every EMA acts as support and resistance levels. You have to remember that. 13 and 48, we can use that as put or call options, and 200 to identify a trend and just to know if we're going to go in at the exact moment when the crossover appears, or we're going to wait for that retest like we saw right here. But you can see clearly that the price stays, right? The 13 line is going to always going to be close to the price. You can see it right here, bouncing from it, and here, right here, you can see a little weakness. What is weakness? Remember, if we're going to go into call options, we want to see higher highs and higher lows. That means you have a high, higher low, higher high, higher low, and you can see it right here. You can see it right here. This is a higher high right here, higher low, this red candle, higher high right here in this other candle, higher low in this red candles, right? Higher high right here, higher low right here, and so on and so forth. The thing is that when you see the price, don't do another high. So it stays here, and it stays here in the 13 line, and it doesn't bounce from it, right? You can see it bouncing from it each and every time, right? Here, and right here is, when it stays in the 13 line, you can see that it's not bouncing from it anymore, right? It's not happening, right? It's staying in the 13 line. When you see this right here, I got out right here. That's when I got out. Why? Because first of all, I saw this forming. I saw this line right here forming, and I knew that we could potentially be looking for more downside. Why? Because when you see this level forming, when you see this line drawn in the charts, that means that's a strong ass fucking level, right? So you have to consider going out. Why? Because more than likely we're going to be fucking reversing from that fucking level, right? Like we see here. So in this particular moment, I got out of the trade right in that red candle. When I saw we were going up, but we came down again, right? Right in that moment, I got out of the play with more than 100% gain. So from now we have EMAs. What are EMAs? Exponential moving averages that acts as support and resistance and can give you a clear view in when and how to trade that fucking indicator. So the 200 EMA is always going to act as a really strong resistance or support level, and a trend indicator is going to determine when are you going to make that move, right? Right here you see you have an example of, in this case, a put option. I went in this put option right here. So we have the crossover, right? But now we have the opposite. We have the 13 line going below the 48 line. So the blue line going below the yellow line, right? That's a put signal, right? That's a put signal. You have that signal right here. You can see that right here, right? You have that put signal, but you have that 200 EMA right there. So what do you want to do? You want to wait for that retest. You want to wait for that retest. And where is that retest? It's right fucking here. You can see it in front of your eyes. You have the alert right here, but the 200 EMA line is so close, right? You don't want to take that trade. You want to see if it's going to bounce from it and just keep going up. So you have to have that retest so you can see if whether or not it's going to be a good move. So you have the retest right here. It went a little under it. It went back up. It didn't touch the 200 EMA line, and that is when you entered the trade. Why? Because it didn't touch the 200 EMA. So it didn't bounce again. So the pressure, it was that the sellers were giving the price action was really strong, because it didn't move another into another retest. So you have one retest right here, right? You have that this retest of the 13 line, right, but not the 200 EMA line. So when you see this, that's when you know it's going to go extremely hard. And you can see it here, the price going insane, right? The price going from here to here, and we are talking about 396.13, 390. So we're talking about $6 move. So this is basically a 4, 5, 600% fucking wow. This is insane. All right, so that's when you know it's gonna go insane. We have a $6 moves, right? Potentially $6 moves. And when are you going out? When are you going out of that trade? That's the question, right? When are you going out? So you have the retest here of the 13 line. Remember, EMA lines act support and resistance lines as well. So you see here retesting that 13 line, didn't touch the 200 line. That is your fucking alert to go into puts. You go in here, you have a retest here of that 13 line, but again, it just bounces back down. What that means, that move is not over, right? It's going to go to get more downside. So right here you see this move, bam, all the way right here. And remember, we have levels. We have levels right here. Past levels are always going to influence the price action. So right here you have this level, right? You have that level, and you have this level right here, right? And so you got to watch those levels. You got to watch those levels. So in this particular moment, right here, 392.18, that was my fucking exit, because I was looking that it was very probable that this level will act as a fucking rebound level. So as you can see it here, it rebound from it, right? It fucking rebound from it, and you can see it here the next day. Yeah, it went up, it went back down, right? But then it started running and running and running and running and running and running and running. So you have to pay attention to the levels. That's why I have this chart, and it's always really helpful in my trades. So that's the first indicator, guys. I'm going to upload another video on MACD and RSI. Give you a quick pick. This is the MACD. This indicators right here. This is the RSI. Basically, those are confirmation of that moves. Well, how I do it? Wait for that fucking crossover. Watch that 200 EMA line. and watch what is the MACD doing. As same as the EMA crossover, the MACD also have those crossover, and the RSI also have those crossover. So first of all, you have the EMA crossover. Watch the 200 EMA lines. You watch what's the MACD doing. What's the MACD doing? It's green. It's fucking green, and it's the blue line is above the orange line. That means the move is strong. So it's powerful. So you can see the RSI right here. The RSI is through the fucking roof. That means the move is strong. So you look for those confirmations, right? If you have more confirmation, you have more confidence. It's more probable that that move is going to happen. So that's how I do it. That's how I do it. EMA crossover. Watch the 200 EMA line. What's the MACD doing at the moment? What's the RSI doing at the moment? And I got in the trade. That's how I do it. And basically right here, you can see it right here when the EMA crossovers, right? It crossover, the blue line goes below the orange line, right? And you can see the RSI right here going below that yellow line. So what that means is that you are going to probably going to have a rebound, right? You're gonna have that rebound. Why? Because you're looking at the MACD and the RSI as well. You're not only looking to the EMA lines. You have the EMA line, but you have the MACD and the RSI as confirmation for that moves. So you have it here, right? You have to. The most important part is the EMA lines. You have to have that retest. You want that retest for you to be able to go in, right? Because the 200 EMA line is a powerful fucking line. So you don't want that bitch to fucking rebound to you and just put you in your knees, right? You need to wait for the rebound. You need the retest. You need the fucking retest. So it retested. It was already crossed, right, in the MACD. It was already crossed in the RSI, right? What that means, it's going down, baby. It's fucking going down. And right here is another example. And when do you get out? You use the prior levels, right? But you use the RSI and the MACD as confirmation, right? If you see this shit right here, you know, all right, it's going down. It's going down. It has the strength. You can see it in the MACD. But you're also looking at that something is going, right? It's going, something is up, right? Something is up. The line is not fully going just in a straight line, right? It's in a straight trend. So you have to look at those moments to see whether you're in, out, or you're not trading. That's the importance of the indicators, guys. This is the keys of the kingdom, guys. Let's make this fucking bread. I'm here for y'all. Use me, motherfuckers. I'm here. Let's get it, baby. I'm going to upload another video tomorrow to just go dip into this shit.